Hi everyone, thanks so much for watching. Today's video I wanted to show you a neat little concept called cost of delay. And I like this one for showing sort of the client who is maybe hesitant about converting now and they think they'll wait to a later age or the timing will be right later. I really want to highlight the cost of their increased age is really the most paramount factor in the cost of insurance. So what I'm going to do is I'm going to set up a case here and I'm just going to go with my sample case and hit continue. And this concept works with any sort of plan. Like we can show the impact of term, we can show UL, and we can even do whole life. In this example, I'm going to focus on universal life. So the first thing, of course, I'm going to pick my insurance benefit. So I'm just going to pick $1 million here, and you can see my client's a 50-year-old male. So what I'm going to do is I'm going to search the rates, and you can do this with any specific company. You can do it with different companies. I'm just going to say BMO across the board here. So I'm going to search for BMO here. Because I know they have a pretty competitive UL, and it's going to give me a nice baseline. And I'm just going to take this life dimension and add it to the case. So we've got that in there. So that's age 50 here. And then what I want to do is I want to use the insurance override age here. So I'm going to make them 51 now, and I'm going to search again. So this is at their increased age with the delay that they would be doing. And again, I'm just going to select BMO. Again, it works with, you could survey all companies or one specific one to, for example, on a term conversion. And again, I'm going to add to the case. And essentially, I'm just going to repeat this process here. I'm going to make them 52. And you can, it doesn't, you can do it for different lengths of time. It might just be a 1-year comparison where you just want to say, look, you're 6 months closer to your next birthday. Here's going to be the impact of cost if we don't do this today. You might want to show over, specifically a 5-year plan. You might want to say, look, here's over the next 5 years how that impacts you. So again, I'll search there. So I've got 50, 51, 52. I need 53. And I'll just search because I know BMO is going to be near the top. And there it is. So I'll add it to the case. And in this example, I think I'll do about, I'll put 54 in there too. And search it. I think you get the idea. I mean, you can repeat this as many times as you'd like. I'll just search here and add my last one. So you could repeat this for 10 years if you decided so. So I'll put all those in. Again, we can edit these to show the different ages in there. So we might want to make this really simple for our client. The other thing I would also do is I'd add a report note and just say that this assumes current pricing. Because, the rates are subject to change. So, it's not guaranteed that these rates will be in the future. So again, once I've got my plans in there, all I want to do is select my metrics. And for this one, what I'm really after is just the cost comparison. So I might just want to show, not so much the annual premium schedule, but I want to show the sum of the premiums. There's no cash value in this case. And I want to show my presentation summary. A really nice one on this one would also be cost per thousand, because it's going to take out any of those kind of differences and just show me that cost per thousand. So once I've got all my report components in there, all I have to do is hit generate. And again, it's going to be really impactful to say, here's the current age and here's the age following out. And you'll be able to see that increase of cost. So yellow being the current age and pink being the delayed age. And so when we come down here, again, we can see it's 300, say life expectancy would be 390. Well, the cost of delaying it 4 years is going to add around $80,000, $86,000 to that cost. So really impactful and really important that you get that conversion done now, or it's much more beneficial to pay for your policy now than later. Again, you can say even 1 year cost of delay, it's almost $20,000. So it really highlights, and that could be a month difference in your in your nearest age. So really neat concept to show your clients. Make sure you leverage this in the system. This is our cost of delay, how you can work that by using different ages and highlighting and comparing them next to each other. Thanks so much for watching, and we'll have another video for you shortly.